Hey everybody, BRW Solo here. Today I want to talk about some things in the markets that I'm seeing as it's been an interesting week. We're going to review some things that I have found to be quite interesting, trying to understand the Bitcoin pattern, the markets, and then later on we'll get into TX, which if this is your first time understanding crypto or whatever, I am a channel that specifically focuses on the markets, TA, and TX, which TX is formerly Sologenic and Corium, which we believe is going to be pioneering the space, bridging traditional finance to blockchain technology through compliance and a lot of interesting things and developments. And this is going to be a great project. So we'll see what this project evolves to, what kind of product it delivers. We are, as TX holders, we are waiting for the marketplace to launch. And it looks like they're giving us a lot of good signs. We did get the SOC2 Type 1. That was a certification that was announced just recently. And we're just now waiting for the full event to happen. And we're trying to see if this is all happening on the onset of the bottoming of the market. Okay, so I don't want to say or claim that it's the bottom of the market, but let's see if the data supports it. All right, so first we got to understand Bitcoin, obviously, because it's the leader. So let's turn to the charts for a second, and I just want to review really quick. In my last video, I had talked about that this was an Elliott wave sequence, which started in 2022, right? So what ended up happening is we had a big crash here in 2021, 2022. That was a big bear market, some people remember. And the idea is trying to figure out this pattern here. So I took the time and tried to figure out what this Elliott wave structure is telling us for the future. And then I'll get into some of the details here as well. So let's talk about here. So we have wave 1, a wave 2, 3, 4, and a 5. So this is that green zone. This would be your impulsive zone, right? So the corrective zones right here, they kind of, well, they have a certain pattern where they just like to oscillate and do nothing. But when you look at areas like that, they can take some time. Okay, so this is kind of important. So I'm wondering where we are here in this particular stage, because I think I may have figured out a fractal that may give us a clue on how this is going to develop and form here. So anyways, we got the whole 5-wave structure, and we have an A, a B, and a C. And then of course you have this 200-day moving average here in red. So looking at wave A to wave B and to C, I've been trying to calculate exactly what is going on in this pattern. In the last video, I actually had a different set, since Elliott waves are very subjective. I had calculated like this, where I thought it would have been more like that, okay? And there was good reason for me to believe that. But now that we just had this move here, where we actually topped out here, and now we have potentially wave 5 right over here, right at 65. It's like a double bottom, you can tell, right? Wave 3 and wave 5. So what I like about this pattern actually is I really think that solidifies it even better. Well, you had wave 1 and wave 4, they touched. They didn't cross, they kissed, which is good. You want to see that. So in context, just so you have an understanding, in wave A, you have 3 waves. In wave B, you have 3 waves, and then you have 5 waves in wave C. This is called an expanded irregular flat. This is the corrective phase. What's also interesting about this corrective phase is as soon as we started it, altcoins started to bleed. They started their bear market. See that with Ethereum. See that with altcoins. A lot of coins didn't move during this, we'll call it the corrective red stage here. So the idea is to figure out, are we done here? Well, altcoin dominance is suggesting that we are done with this. Now, there's a couple things we got to look at. Let's say the bears are right. Let's give them a case. All right, so a lot of them are calling for October, which would be right here. And I'm going to turn this line into a little thicker orange vertical line here. And so this is played out to be in October. Well, here's the problem with that. So if you assume we're going to go lower, this right here, this white line is the 300-week moving average. And well, let's actually extend this one right here, which would be the 200-week moving average. So I'm extending these lines by projecting here and trying to see if this is going to play out. And all I'm going to do here is I'm going to turn this line here red so it matches. All right, so we have the 200-day moving average. I'm sorry, this is the week average. I should probably change that. That's not correct because we are on a weekly chart. So 200-week moving average is right here, and then the 300-week is right here in white. Well, the problem is if you're expecting lower lows, you're going to have to justify why this price is going to break this critical, very critical moving average, and then explain even why it's going to go under 57,000 under the 300 when we've never done that before. Now, let's take this into context for a little bit. I'm going to turn on two things that I had saved here, which we have. Let me see if I can get that. There we go. And so what I want to do is I want to explain this little yellow box here. What happened during this yellow box? Well, this is the red 200-week moving average. But the yellow box, that was the time frame that we had been below that. And why is that? Because in 2022, the equities had a bear market. Crypto collapsed. We had FTX, Luna, Celsius, right? The banking crisis, if you guys remember. And then most importantly, from the Fed side and from just the market standpoint, the liquidity crunch. All of this plays a huge role in destroying a market. How can a market recover? How can it have any sort of structure if there's absolutely no liquidity at this time? And now, are you telling me that you can justify that we can go underneath the 200-week and the 300-week? I don't know. I mean, if you think we're going to lose liquidity here in the future, which the data is showing we're not, then sure, you have a case. But that's playing on probabilities, and I don't see that. Now, let's zoom in one more time here on what I see on the C wave here. This is a very much a textbook irregular expanded flat, especially in the C wave. So when you measure wave 1, 2, 3, 4, 5, what I like to do is I like to take 2, measure 2, 3 here. It's actually right there. And then number 4. If you zoom in on this, and this is what I've been waiting for, is right there, right at support at 60,000, just about 62. You had the 618. It touched the 702 over here, but the 618 had held. So how is that? Isn't that interesting, I should say, that the 618 and the 200-week moving average both hold very well right here. And on top of that, you have bullish divergence on the weekly. There's not enough momentum to come down and make a lower low. If you have RSI that's creating higher highs here, and on top of that, we just created a lower low in price, that's a very strong reversal pattern right there. So in context with everything in terms of the Fibonacci, it looks to me like that is going to play out. And most likely it's going to bottom right there. But I do want to talk about one more interesting thing about Bitcoin and exactly where we are in the whole context of 2015. So I'm going to go back here one more time and I'm going to turn on this bars pattern. And what am I seeing here that's very interesting with, and I'm going to actually throw out a little box here. So let's zoom in right there. A little faint box there. Should probably make that a little better here. All right, let's do this. So as you can tell, we have this little, we'll call this little green box right there. I think we're going to be under this white trend line here. And the reason why I think that is we're in a fake out stage right now. This is where bears are playing a little bit of a tug of war, and there's a reason for that, but there isn't enough liquidity to boost us out just quite yet. So let's go back in the past in 2015 and let's take a look at this pattern here. So I have this structure here where I have wave 1 and 4 where they touch, they don't cross. And then you have a line here. I want you to pay attention to this white line here. This is a good trend line from the bottom. But do you see this little area? It's a fake out area. It's an area where what you end up having here, and at this time is a little different, but in a way it's the same. You had a lot of longs go really, longs were stacked a little bit too heavy. So the market shorted that, and the exhaustion took place right there. So when you had this little box, this box is just telling you, hey, momentum suffered for a little bit. There were too many people stacked on the wrong side. And so the market made them pay, but it didn't break structure. So essentially what you're trying to see is we're trying to see if this area is going to play out the same way along with this line. So as we take it more forward here, I really think this is what's going to happen for some time, maybe 5-6 weeks. So expect Bitcoin to stabilize. So one of the rules here is that when Bitcoin stabilizes, Bitcoin dominance goes down, then altcoins can rally. And this is what we're seeing. I really do believe that. And I'll get to that in a sec. So as Bitcoin is making its base and it's trying to do the same fractal pattern of 2015, we're going to probably see something like this. What's really interesting to me is if we do see something like that, this could be timed with Clarity Act potentially, but I don't know if this is going to play out exactly like this. But if it does, then I wouldn't expect a all-time high break around, I guess the beginning of next year potentially. And because it is midterm year, we would be making a slower grind up. So we'll see, because liquidity isn't as ample for crypto there yet, and things can change over time, especially with Clarity Act. So we don't know, but we'll have to stick with a more conservative structure here. So this is just my idea on how I think. Now, just to also support that, the stochastic RSI is losing momentum. So this would say, okay, potentially middle of July, I would say we would start moving up, breaking this white line again. So this to me is going to be called the fake out zone to match the 2015 period. All right, so let's, and I hope that was easy to explain. I know these technical charts can get quite interesting and messy, of course, but let's go turn into the sector we all want to look at, which is if you are in TX and you are in real world assets, tokenization, you're interested in that. This is an area that I believe is going to be the most growing stage. And in the context of what I think about alt season, I do not believe we're going to see a true alt season ever again. Based on the data that I've been looking at, I don't believe we're going to see a lot of these. I think we're going to see a lot of these coins die, actually. So we see that because RWA has a purpose here in this space. We see that because tokenization is what's going to drive the future. It has a use case, and we'll see these traditional finance. They're going to carry over here to the real world assets blockchain. So let's talk about this real world asset chart here. So over time, over the last 2025, we had crashed. We tried to consolidate and try to break out as well. What's really interesting to me is even if I get the lows to the tops, it still holds the 618. It's still holding structure. And we're just waiting for when this move is going to happen. Well, the thing is, Bitcoin dominance, like I said, is coming down while the Bitcoin price is stabilizing. So it's good. There's a good reason why we could actually see a move up here. And then also in the context of TX here with the RWA, let's see what happens here. And I'm going to explain some things that kind of bothered me a little bit about this chart here. So I did notice this a while ago, where if you notice, I counted the waves for TX, which is wave 1, 2, 3, 4, 5. But here's the problem. 3 is an invalid wave. It's short. You can't have a short wave. So this isn't a textbook at all. It's actually an illegal Elliott wave. Now, if it had stopped right there, you could argue that. But the thing is, it stopped right there. Now, what's funny is I had measured this 2.272 and I said, okay, well, it looks like we're actually moving up because we had this drawdown and then we have this move already at almost 0043. What's really interesting is if you pair that with the MACD, there's been bullish divergence been going on here for at least about a week. So when you look at these bars, when they start to come back to the midline and then we start seeing a cross, that's telling me that there's a cross. Or I'm sorry, there's a bull run potentially happening here very soon for the RWA space. Well, the RSI is also trying to make its way back up into the 30 zone. So anytime you're back into these green zones or colored zones, this is when momentum actually kicks in. We do have momentum support as well. Now, if I look at a different time frame, let's look at 2-day chart. We have the same thing. We're starting to lose momentum, or the bears are starting to lose momentum. So there's some pressure going upwards. So that's a good thing. Now we're waiting for momentum to confirm here on the 2-day for the stochastic RSI. And then for the RSI, we've bounced off this 30, but we have never broken into the green zone. So there's some surprise that can happen. But here's the thing. When I look at this pattern, this is not any kind of technical analysis pattern. This is not a real pattern. There's nothing here. It's just I'll call it a faucet pattern. It looks like it's draining. There's no structure to it. I don't like these Elliott waves. It's funny that it does work out so far. We'll see if it plays out. But if it does, then I would expect a giant move up. And this is a good thing, actually. I don't think it's a bad thing at all, because if you start seeing price like this that drops, just like Ethereum, Solana, and some other coins that have, this is what we call them a launch type scenarios. So when a coin launches, generally what you'll see is a big crash structure, right? Because of order book fragmentation. You'll have, just because there's no real algorithm tied to it. And of course, liquidity is very thin. So if we do get a chance to move up, then potentially we could see the 1 cent here kind of rebound and then make our way up to 5 cents, which I think would be par. The average would be matching the average of where I think the RWA industry is for projects like TX that are starting to just make a play here on the scene here for RWAs and crypto. So let's see how that plays out. This has just been, an idea of where I think we are in the market. So for the most part, let's see how this plays out. I do believe Bitcoin is going to hold support right around here, and we'll probably have this little fake out here. So let's see. Let's watch this week, and let's hope that things happen after the SpaceX IPO, which is on Thursday, and see if liquidity does transfer over to crypto, especially things that have a little bit more interest for these investors, because we kind of need it at this point. Liquidity is running thin in the crypto market as a whole. So anyways, I hope you guys enjoyed that content. If you guys liked it, subscribe, and of course, stick to the BRW Capital Validator. And yeah, we'll see you on the next one. Thanks, guys.